Hello traders and welcome to another video review. Today is Wednesday, July 12, 2023. Let's find out what is going on the Forex economic calendar today. What do we see here are the very important data scheduled for release today. One of them has been scheduled already. Reserve Bank of New Zealand interest rate decision was made at 4 o'clock in the morning. The previous reading was 5.5%, forecast was 5.5%, and the actual reading was 5.5% as well. So the interest rate decision in New Zealand remains intact. Core CPI data from the US are scheduled for release at 2:30 today. And the market participants expect this core CPI to decrease from 0.4% to 0.3%, and the overall CPI to increase from 0.1 to 0.3%. Another interest rate decision is scheduled for release today at 4 o'clock. And this is the interest rate decision of the Bank of Canada. The previous reading was 4.75%. The forecast is 5%. So the market participants expect a slight hike to the level of 5%. And then 30 minutes later, crude oil inventories from the US are scheduled for release as well. So those are the most important data releases over the day of the Wednesday. So let's dig into the technical part. We are going to start with the New Zealand dollar. The 4-hour chart of the New Zealand dollar is showing us a kind of a breakout above this local technical resistance. This technical resistance has been tested like 4 times. 6,214 is the level. We got the breakout above to 6,234, but then immediately during the next 4 hours we have the movement back to the downside. So it looks like this kind of a movement was a fake one. Nevertheless, let me just point this this local high made here, and it's kind of important because the bulls are still trying to break above the July 16 technical resistance. This technical resistance is located at 6,242, so they were just a little bit below this level while the next pullback happened. Nevertheless, the situation is that I didn't actually broke above this level, so this is still the main technical resistance for today, and the market might be trying to break above it later on the day. So the direction on the interest rate decision is not that great. The momentum stays in the range between 50 and let's say 60, so it's still a positive momentum. The bulls have control over this market, of course, and it looks like they are still trying to break above this local technical resistance, and of course the swing high at 6,242. Only any kind of sustained breakout first below the 50 and then below the 100 periods moving average might change the outlook for more bearish. So that was the New Zealand dollar 4-hour chart. Let's now switch to the charts of the related to the US dollar, because we got the US dollar data coming later on. So what do we have here on the US dollar to Japanese yen? Massive sell-off, way below the extremely oversold market conditions. So we have been warning about this situation previously when we were having the analysis of the US dollar to Japanese yen. The ultimate target for now for the bears is 138.46. So we are simply moving lower and lower. As you can see, we got even the cross of the 50 periods moving average and 100 periods moving average. Let me just change the color of one of them, because then it will be much more clear. So the 50 is green and the 100 is purple. So as you can see, we have the cross, and then the market has been seen trading below this technical support. Right now it will be of course, the technical resistance 140.94 right now is the technical resistance for the price. So we might suspect this resistance will be the main technical resistance for now, and the intraday technical resistance is located at 140.17. And the next target is visible on the chart, the technical support from the beginning of the June 2023, 138.46. So this looks very, very serious for the US dollar to Japanese yen. It doesn't look like the typical correction. It looks like more likely a trend reversal on the US dollar to Japanese yen. Let's take a look what's going on the US dollar to the Canadian dollar, because we got the Canadian data later on scheduled for release in form of the interest rate decision. And as you can see, we have another engulfing pattern here created around the level of 1.3386. Then you have the sell-off, a little bit of the consolidation, and then the sell-off continues. Right now we are testing the technical support around 1.3202. So when this technical support is violated, then the US dollar to the Canadian dollar might go to the swing low, and technical support located at 1.3116. So that's the next target for the best if this level is clearly violated. Intraday technical resistance in case of the bounce is seen at 1.3244. So any violation of this level might lead to the test of the moving averages. So right now it would be okay to mark this level 1.3386 as our technical resistance, important technical resistance, because we got the reversal from this level. So that means something here. And if you manage to make yourself familiar with the Elliott waves, you can see clearly that this movement to the upside was made in only 3 waves, A, B and C. So this looks very much corrective in the nature, and this swing to the downside, the previous wave down, looks much more impulsive. So it looks like the US dollar to the Canadian dollar might be going lower for some extended period of time, because this internal correction, ABC internal correction, had been completed, and now it looks like the market is resuming the downtrend that was made in the June 2026. At the end of the May, the whole June was the downtrend correction, and now it looks like the market will be going lower as the downtrend continues. Okay, so that's the US dollar to the Canadian dollar. Let's just take a look at our last commodity, our last pair, our last asset. The commodity is of course the crude oil. The data of the crude oil will be released today. As you can see, very nice test of the main technical resistance, the key technical resistance that was established 5th of the June 2023 with 75.03, and it was tested just yesterday. Bearish shooting star had been posted at the very end of the move, so that means that bears are defending this level, and this of course rally was made during the extremely overbought market conditions with the RSI at the level of 76 points. So in that situation we should expect some sort of the pullback. But if you take a look at this 50 periods moving average, you can see that very often we bounce from this moving average, and this is why the local technical support might not be enough for the bear. 74.14 is the technical support, but we might dip as low as 73.70 before the uptrend will be resumed. Any breakout, on the other hand, once below the 73 and 70, and then below this local consolidation low at 72.74 might indicate a deeper pullback in progress towards the 100 periods moving average on the 4-hour chart, located at 71.52. Overall, this asset, as you know, has been trading inside this narrow zone. There is nothing right now that would change this outlook, because what we are waiting for is, of course, the breakout either to the upside or to the downside. Otherwise, this range trading might take quite some time in order to terminate this range trading. We need some kind of a breakout. It's hard to say when the breakout occurs. It has to say what will be the direction. But if you zoom out, you can see that in the background we have the very, very big downtrend here, even towards with the spike low towards the 63.69. Okay, so this looks like a consolidation phase of the cycle. So we might have this down movement as the impulsive wave, then we have the consolidation, some kind of a correction, some kind of a pullback as in a corrective style, and then we might continue moving lower, as this is the main trend the market wants to continue. If we switch to the daily time frame chart, you can see it even clear that there is there you go, there is a downtrend on the crude oil, and it's not a weak one, it's a strong downtrend. That was just a recent bounce, and the situation might be very familiar to this one, because as you can see, we've been trading in that range during the end of the December and the whole February, okay, to the beginning of the March. That was the spike down. This is the yearly low. Then there was a bounce, again rejected, and then yearly low tested, and again we got this consolidation here, just as similar as to this one. So what's happened then was the spike down. If the spike down will happen soon, then of course the downtrend will be continued on the crude oil. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys tomorrow. So take care and bye bye.